YouTube. Hope you guys are all doing good. You are watching Passive Earnings, and today in this video I'll show you guys an amazing and exciting opportunity that you might really like. I'm intrigued by it and really wanted to show you guys. By the title of this video, you probably have already guessed it, what that strategy is about. But before jumping into that strategy and how you can leverage the high yielding ETFs, let me show you guys my portfolio today. Today I'm down 0.35%, which is close to $300, but I was able to grab 10 put options. I sell cash secured put, if you're new to this channel, on weekly basis on SOXL to generate income that I then fund to buy recurring payments for QQQM. So if you see here, I have now more than 7 shares of QQQM. All of these shares are bought by the passive earnings that I have generated selling cash secured puts on SOXL and covered calls on TQQQ. So moving on, so I just sold 10 puts at 21.50, a very conservative sell here because the current value of SOXL is around $24. So $3 less than that. I sold that with a delta of 0.10. And then I've also sold a covered call, which is in the money, which I'm fine with because I'm gonna roll this before 9:15. So I was able to collect $40 premium on this covered call, and I was able to collect $140 premium selling this cash secured put. So with that said, I have been able to generate $180 today with all of these options. I still have $7,000 sitting on the sidelines. I'm thinking that the stock market may go down this week a little bit. Pullback is expected. So what I'll do is I'll deploy that at the time of pullback. If it doesn't go down, I'm fine with that because I have already made up $180 for the week from selling these options. Currently, the stock portfolio total value stands at around $84,500. That's about it from the portfolio side. Now let's jump right into the other options. So the other thing that I wanted to discuss is the amazing strategy that I came across just today, and I basically developed it myself, so there might be some errors and there's not much data to prove this strategy as of now. I would say 3 to 4 months is nothing in a stock market compared to the solid index funds and other ETFs that have been around for quite a few years. With that said, what I tried to do here, I use this tool called Portfolio Visualizer. I'll paste the link in the description box below if you want to play around with this, putting different scenarios and stock values. What I did is I came up with I didn't pick any start date or end date. It automatically picks up the start or inception of all the stock values that you put in, so I left it there. I wanted to include the year-to-date returns. For simplicity, I just went with $100 as an initial investment with no rebalancing, no cash flows. I'm not contributing anything here. And then the important one was investing dividends. So whatever I'm making, I'm trying to reinvest or have turned on RIP with this strategy, and I wanted to test it against SPY, which is S&P 500 index fund, or ETF some people call it. There's a minor difference between index fund and ETFs. S&P could be considered as an index fund as it follows S&P 500. SPY follows that, so it can be considered as an index fund. But point being, I named these 3 different portfolios as YieldMax, then SCHD plus YieldMax, and then portfolio 3 QQQ, SCHD, and YieldMax, and comparing all these three with SPY, which is the industry standard, right? So what I'm doing here, if you see here, I selected TSLY, which is YieldMax fund for Tesla. Then I have YieldMax fund for Apple, YieldMax fund for NVDY. In first portfolio, I'm going with, which is this one, YieldMax portfolio, I'm going 33, 34, 33%, which is 100% in altogether. In portfolio number 2, I decrease these YieldMax funds by a bit, and 50% in SCHD, and together in YieldMax funds 50%. And then in portfolio number 3, I invested 11%, 12%, and 11% between Tesla, Apple, and NVIDIA covered calls ETFs. And then 33% goes in SCHD and 33% in QQQ. So these are the three portfolios that I've created. And then the fourth one would be SPY, basically 100% in index fund. So if you just invest in S&P 500, what would be your returns? What I did here is displayed income. I selected as yes, meaning that it'll show you how much income would the portfolio be generating, because that's the whole point of these YieldMax funds. So let's move to the result. And honestly, before moving to the result, I was amazed, and in a very good way, that the results have been shockingly good for these high YieldMax funds. So if you see here, it basically show you what the percentage is for first portfolio, which is YieldMax, and then what is the exposure. You can play around with it as well. Expense ratio is a bit higher, which is close to 1% or 1% even, but overall, we have to see the returns. Matrix, if you are into, if you're a nerd about all of these metrics, you can give it a shot. Annual returns, monthly returns, and everything else. So this is the summary for YieldMax. Same goes for SCHD plus YieldMax, which is 50% SCHD and 50% YieldMax funds, and then 33% QQQ, 33% SCHD, and 34% YieldMax funds. So how does that look like? Here is the performance summary. So the only concern, or I would say the only thing that I would really want to highlight here, is that all of these funds, the YieldMax funds, are fairly new. Like, these have all been started, like all of them combined started since May. So Tesla, Apple, I think Apple and NVIDIA and Amazon were the initials one, which started last year sometime, but these three that I've selected are all started from May, meaning the data that you see here is a reflection of the last 3 to 4 months, May, June, July, and August. So 4 months of data. So what you see here, YieldMax fund for a starting balance of $100, if you have invested that in the month of May, you would have made $111, which is 11.43% return. But if you see here, max drawdown, meaning it is the most volatile, or it has most most variant compared to S&P 500. So it has been down at the peak at 3.1%. Standard deviation is 23.3%. But overall, if you look at it, this over last 4 months, if you have been investing in YieldMax fund, you have better returns than SCHD plus YieldMax, QQQ, SCHD, YieldMax, or even S&P 500, which has returned 108. And interestingly enough, all of these portfolios that I've created in a manner, they are all returning different values with with the small change, and if you look at it, it aligns really well with our other findings. So let me show you guys the portfolio growth. So here it says all of these, the value of all of these shares or stocks or ETFs, you want to call them, starts from May 31st, meaning the latest one, ETF that you see here is has been released from May 31st. So starting from May 31st till today, which is okay, so not for the month of September, but until the end of August, it has calculated that there is a single winner, clearly a simple winner here, which is YieldMax fund, which you can see here. And fortunately or unfortunately, and really surprising to me, is that S&P 500 has been lagging a lot here. So the green line that you see here is S&P 500. So if you were if you want to be conservative and play with QQQ and SCHD, you can pick either of the second or third portfolio, which is SCHD plus YieldMax, or QQQ, SCHD and YieldMax, which will give you return of pretty much similar returns. But over the past 4 months, YieldMax funds have clearly crushed S&P 500 market here. On top of that, you see annual return. It reflects these 4 portfolios, starting with YieldMax, which is 11.43% return, then 9.62, 9.32, and 8.18 respectively for different portfolios. But the very interesting thing here is the portfolio income. If you think about it, the portfolio income that you see here, this income reflects the YieldMax income, which is $12 here, more than 12 actually, but the SCHD and YieldMax fund return is $7, then QQQ, SCHD and YieldMax return is $4. S&P 500 has not paid a dividend in the last 3 months or so. It is due. I think it has paid one, but it does not show as a part of portfolio income. I think it has paid in June, in the month of June. So but it didn't reflect. It's definitely less than $4 for $100. So but this return is crazy, like 12% return, if you see, is all from the dividends, and that is what the reflection or the difference is, right? The overall return that you see here, reflecting $12 is the return from the final balance is from the dividend. So overall it has not been able to perform really well from the stock price or ETF price, but the return from the dividends is crazy, and that crazy dividend return is reflected here. So one strategy that you can adopt, again, it is not a financial advice, but I think what I can also do is we can start investing in these high yield max dividend funds or ETFs, and then the dividends that we get from these, then we can invest these dividends to other stocks or other ETFs like S&P 500 to make a good return. So take these returns and invest in them in the other ones, so that basically you will get these returns, but as well you'll be invested in the others on the other side as well. But overall, for the last 4 months or so, S&P 500 has been crushed by YieldMax funds, and the overall return is 8% on S&P 500, 11.43% on YieldMax funds, close to 12%. So this is it. Just wanted to show you guys this strategy. I hope you guys like this video. If you haven't already subscribed to my channel, please do so, and leave me a comment. What do you think about this strategy, and long term, would it would it would it be able to compare or fight against S&P 500 with such results? I hope you guys like this video, and I'll see you guys around in my next video. Till then, take care of yourself and people around you. Goodbye.